Mark Carney, when you look at the change in administration in the U.S., what does a Biden administration mean for climate change and sustainable finance?
Well, a couple of things. First is there has been this disconnect in that the U.S. private sector, whether it's the innovators in the real economy or large financial institutions, have really been at the forefront of addressing many of the issues around climate change. And yet, with the current administration, obviously officials have not been engaged and have been at best neutral to global efforts. So it's a big deal. It is a big deal that Joe Biden is president-elect and has a focus on this. I would make a distinction between a series of initiatives. Part of what we're talking about today, what we're focusing on today in the private financial sector, which is putting in place all the elements of the framework so that every financial decision can take climate change into account. That's what's going to drive change. Of course, there are a series of other things that governments are doing on the fiscal side and the regulatory side where you have parallel agendas, if you will. And from what we're talking about today, the Biden administration can make a huge, huge difference.
Mark Carney, is there a danger that a lot of the private companies, because they now think that the U.S. is fully behind this, don't go the extra mile in actually making sure that they adapt to climate change and risks?
No, I think it's the other way around. And I think one of the points we're really stressing here is that there is enormous opportunity. This is my view. This is the biggest commercial opportunity of our time because you have a massive issue. We all know this with climate change. And the companies that are part of the solution are creating enormous, enormous value and will be rewarded for it by the markets. And the markets are waking up to that. We see that in a number of valuations. There's a long way to go. And this is a market in transition, just to be absolutely clear. It's not about just, it's very important, pure green power and zero emission vehicles, but it's about every sector of the economy, from industry through to technology, making this transition. It's about investors and banks finding that value, supporting them, and obviously screening out those with risk. So I think what the new administration does is it reinforces, and there is enormous global momentum behind this. It just last 3 weeks, we've had 3 of the global giants, China, Japan, South Korea, make net zero commitments. That's 126 countries around the world who are committed to net zero. We don't see fantastic if the U.S. joins that. That gives the direction. The companies that are part of the solution, as I say, will get rewarded. Those who are laggards are going to get left behind.
How helpful to the bigger goal of climate change and trying to keep a cap on carbon emission is ESG investing? There's a worry in certain parts of the markets that this is almost a free pass for asset managers to actually put a windscreen up and saying, well, we're doing ESG investing, but it's just not enough.
Well, look, I would agree with that in terms of the focus on accomplishing net zero. ESG is not enough. It has other benefits, but the E in ESG, first off, is not focused on net zero itself. We have to get to net zero to stabilize the temperature at any level, and that's part of what we're drawing out at this summit, which is to go through what type of disclosure do you need? You need TCFD disclosure, first and foremost. Secondly, what do companies need to have? They need to have net zero transition plans. And then investors or providers of capital, whether they're banks, pension funds, asset managers, asset owners, they need to chart, determine who's the leader, who's the laggards, who's on the right or wrong side of climate history here, and put their capital behind that. But pools of capital, all those pools of capital will increasingly be judged. They will be asked, are they on the line towards net zero? And ESG, Mark, is not the answer to that question.
Who should be doing more than they already are?
Yeah.
Is it, is it a specific group of investors?
Well, I think, look, one of the big messages out of this summit, and there's 10,000 people from various institutions around the world crowding into this as we speak, in a good way, is this huge, huge momentum. And people, when the market gets behind fixing a problem, it will solve the problem. So this is fundamentally, it's a positive message. Now, to get to the answer to your question, what we need to do, there's a couple of ways to address this question of the transition. There's a big group of large asset owners, 5 trillion of assets, called the Net Zero Asset Owner Alliance. They've banded together. It would include CalPERS, AXA, Allianz, the Japan pension funds, Caisse de dépôt in Canada, others. And they banded together and said, look, we're going to manage down the carbon footprint of our multi-trillion-dollar portfolios by 29% over the next 5 years, and we're going to get to net zero in time for 2050. So that's one approach. Another approach, which is coming out later today, is an approach for consultation led by a guy named David Blood, who is the founder of Generation Asset Management, which takes the next step, which is to say, okay, well, if you're managing down the portfolio, what's the implied temperature rise of your portfolio? So in other words, what's your contribution to climate change? And again, we have big pools of capital who are looking to move from where the market is today, which is well north of 3 degrees global warming, to their own portfolio, manage that portfolio towards 1.5 degrees, which is the Paris objective. Now, let me kind of bring it together. I think one of the things that is happening, which is exciting and absolutely necessary, is that a market in transition is being created, and it's the transition towards net zero. We, in the financial sector, whether you're officials like me in the UN role or in the private sector, we need to think and determine the ways to communicate that to the people watching. It's ultimately all their money. They're going to want the answer to that question. Is it being invested in line with solving climate change? And we will get there. We will get there. And the Blood report, which is coming out today, the approach of the net zero asset owners, the work of a number of firms around the world are part of helping to answer that question. Bedrock issue, TCFD, started by Mike Bloomberg, and only 5 years ago, and now we're on the cusp of getting that on a pathway to mandatory. Again, all moving in the right.
You've called for a bigger and better functioning carbon markets. What can be done there?
Yeah, it's crucial. We have a limited carbon budget. We've got to conserve it. Well, new technologies come on. Part of that conservation is going to be offsets. So think nature-based solutions such as reforestation, but think also conversion of dirty fuels like coal into gas, into renewables, and the offsets created. There is a blueprint, the first draft of a blueprint coming out tomorrow. Bill Winters, the CEO of Standard Chartered, Annette Nazareth, formerly of the SEC, have led this effort, sponsored by the Institute for International Finance. So all the major global financial institutions, there's 50 plus 80 of them working on this thing. Blueprint coming out tomorrow, how to professionalize this market. This is Bloomberg, so if you like data, this is a market that's $300 million right now. It's a joke. It should be measured in the tens of billions, if not hundreds of billions. This type of work, and our intention for COP26, just to be clear, is to have this market up and running, properly professional, up and running by this time next year. And so really ask the institutions out there who aren't engaged to get engaged on this when the Winters report comes out tomorrow.
Should central banks, but also governments, only funnel money in this crisis to climate change friendly businesses?
Well, I think, decision for governments, but certainly we're having a major strategic reset across. It's a rare company that had the right strategy going into COVID, that has the right strategy post-COVID with all the changes that have happened from technology to social demands to climate change as well. So if you're operating, you're a large company, you should have a net zero plan. But to be clear, what the role of the market is to help with that transition. So companies with plans, credible plans, they will take some risks, they'll have investments, and they should be back. And governments, in thinking about how to support, particularly as we get through, and we will get through, the crisis phase of this to the regeneration, when we go from redistribution to regeneration, when we get to that point, governments should be looking to who has a plan. Look, we're not this build. It's build forward better, right? It's build the future, make the future, and make the climate.